Good morning, everybody. Hope everybody's doing well today. Let's get it started with Tom Gentile in 5, 4, 3, 2.
Hey everybody, good morning. Tom Gentile here. Welcome to the opening bell, Power Profit Trades. Glad to see you in here again this morning. All 1,200 and change of you. We're gonna do a couple things a little different today than what I normally do. I am going to be bopping in, and we're going to be looking at, we're going to do a market outlook, all right? We're down again today. We're down but not out. I'm talking about the markets right now. I just checked my stuff. I'm up a little bit, but you know what? Everything's just now opening right now. But I want to look at a market outlook, and I want to look at something called darknet signals. Wanted to do that with you yesterday, and I just did not have the time. So we're going to talk about darknet, what darknet is and why I use it in my trading. We're going to look at some of the stocks that were talked about on the Monday Morning Live show, okay? So I have about a half a dozen of those stocks that came up, including SLI, including Twitter. And we're going to see if we have any darknet signals on them, because I don't take a trade because somebody tells me to. What I want to do is I want to analyze it and see if I am spotting any opportunities, if I am able to create an alternative risk trade, and then, of course, if I'm able to plan, execute, and manage that trade. I also want to take a look at unusual options this morning, most notably calls, unusual calls, and unusual puts. And I want to talk about rolling tide on Stitch Fix. All right, if you know what I'm talking about when I talk about roll tide, then you are already there. But if you're not, if you're new to the program, folks, all right, then listen up. I'm going to teach you a new strategy. So I'm going to show you today how to look at the stock market differently using something called darknet, how to look at the options differently using unusual options, and how to look at a trading strategy that is most often overlooked by everyone else out there. Of course, I got a little crypto news for you too. We're going to look at that, and probably the most important piece of crypto news is what everybody missed yesterday, and it has to do with Jack Dorsey. So, good morning, everybody. TC, glad to see you in the house today. Derek's in here as well. I see lots of members. These must be, I'm kind of thinking that all these members are related in some way. All right, so we got a lot of family members in here as well. Gags, good morning to you. Diana, crypto newbie, glad to have you in here. Livestocker Derek. And of course, I cannot forget about my YouTube group over there at tomstradingroom.com. Glad to have you guys all kind of falling in place here this morning. Listen, here's what we're going to do. I'm going to break down these segments. These segments are going to be somewhere around the 15 to 20 minute segment area. And between those, I'm going to be checking in with all of you, all right? Whether you're Dave hanging out over there on YouTube, all right? Or whether you're one of the many folks like Larry, Deepak, Han Mango, LC, DD, and all the rest of you that are hanging out with us here at Monday Morning Live. I'm going to be checking in on you from time to time and see what you have to say about whatever it is I'm talking about. So let's go ahead and let's get rolling right away. Here we go. So let's talk about, I'm ready to place some orders here too. Let's talk about the stock market. I want to take a look at the overall market here, and then we're going to come back and we're going to look at it in what we call darknet strategy. All right. So as you can see right now, I'm looking at the SPY. All right, SPY, S&P 500, and as you see on my screen here, I've gone back about 100 or so days. All right, so I got a 104-day chart. Why 104? That's kind of important because 104 is one of the time periods I use in finding triple stack compressions, in finding these channel collisions, if you will. All right. It's weird, but that's one of the trends that I look for. So I'm going to leave it right here, and we're going to follow through and see what happens. Low end in the last 104 days, 425 on SPY. We ran up and kind of clipped 454, then pulled back, almost double bottomed back here in October. Great October, running forward, a substandard November is what I like to call this. All right. And then, of course, here we are. Monday, we had that big drop on Friday. We had the rebound yesterday. Where are we today? Let's take a look and see just by simply going over and looking at SPY. SPY. Why? Because this is where we want to go. That's why. SPY is down about a little more than 0.6%, almost 2/3 of a percentage point here off of yesterday's close. This is to be expected. We discussed this yesterday. We discussed the rebound, looking at the money calendar. We discussed the ebb and flow that's going to possibly happen through the rest of this week, right? Where's this all going to culminate? Friday. Why Friday? The big report on Friday, the labor statistics report, okay? Depending on how we get past Friday, we'll set up the rest of, not the next week, but the rest of the month. And I'm expecting the rest of the month is going to be an up month, but this is going to be a volatile trading week. Keep that in mind, right? So now that we're done looking at what's going on today, let's drop back here and look at the S&P one more time, right? So when I look at this, I see immediately the areas that gravitate to me was the pullback yesterday, which looks like it should hold, right? Because right now I've got a couple of different areas that we call these stock chart peak lines, right? We peaked out on Thursday's open. We also peaked out on Friday's close. These are two critical areas, right? We go above that peak on Friday, on Thursday's open, and that tells me that it is smooth sailing to new all-time highs. What does the bond market have to say about this? Here's TLT. TLT is the iShares Barclays 20-year Treasury ETF, right? Basically, for those of you that don't know, okay, it's like bonds. If you follow this, you're following the overall bond market. Why in the world would we want to even follow the bond market? Because the bond market, outside of normal everyday trading, will help give us clues as to where the stock market is likely to go, right? I like to look at it like this. The less the bond market moves, the better it is for stocks. The more the bond market moves, the worse it is for stocks. Take a look here with me. So here's TLT, highs on around 152, lows all the way down here just below 142. We've been trading in a 10-point range for months now. Now, back in November, we were close to that high. If you remember what was going on around the middle of November, this is when we kind of peaked out in the stock market and started to make the pullback. And the bond market's been moving a lot like the stock market, with the exception of yesterday, all right, with the big with the exception of yesterday with the big drop down, all right, Friday. Friday's big drop down. Yesterday, we had a little bit of a turnaround, but the bond market's pretty much staying on the high side. This tells me that the bond market wants to move higher if it sees the stock market moving lower, right? So 152, we get back up here and we close above 152. That could be a telltale sign that the stock market wants to pull back a bit, right? So we'll keep an eye on that. I love to see bonds come back down into and stay below 150. I think if we come in here in this range, come back in the center of this particular chart, very, very good for the stock market. Because again, if the bond market sells off hard, what does that mean? That means that traders are potentially seeing interest rates moving higher. If the bond market buys up really big, that means traders are getting scared. Scared of what? Scared of risk on plays. Scared of the stock market. All right. And like Garrett said this morning, it's important to look at, if you see the bond market getting really wavy, the first area you want to go to is small cap. You want to go look at the Russell. You want to look at the IWM. What the IWM's doing today, that turns into what the S&P 500, what the Dow Jones Industrial Average could be doing tomorrow. All right, so there you go in bonds. Let's move forward. Not spending much time on UUP other than the fact that the cash market is as high as it has been. You have to go back to springtime. Right, we were trading in the lows during spring and summer. We rolled up into the fall. Now, I'll say it again. I've said it before on this program. Just because this particular symbol, UUP, is heading higher, that does not mean that the U.S. dollar is going up against commodities, against stocks. the US dollar in this case is going up against other foreign currencies. So call us the best of the worst, because that's what we see right now. The worst being the worst place you want to put your money right now is in cash. However, I've been building a cash position, waiting for days like Friday to take advantage of them, right? So here we go with US UUP, and let's get going with USO. This one's interesting, all right? What's going on with United States oil? Well, we've said it here for some time that coming out of the summer, that the seasonality in crude, the seasonality in oil itself tends to be on the bearish side. Now, what delayed that bearish move? OPEC, all right? The fact that we stopped drilling here in the States, that delayed this move from rolling over. Looks like the move started rolling over if you go back to the end of October, all right? So we're about 3 months behind on this rollover. What does that mean? That means that we could continue to see the oil markets roll over and energy markets roll over into the rest of the year and even into early 2022. So that's what we see happening with USO. And again, what's going on with USO today? Well, let's pop on over and take a quick look. USO. You can see here USO has dropped into new lows today, down near the lows, very, very close to the lows that happened on Friday. We closed below that area, and it is mid-40s is what I'm seeing happening with USO. I also had heard some scuttlebutt about United Natural Gas, right? This one's been way overdone for quite some time. You know, when you take it, you look at UNG. UNG, to me, was just a place for a lot of traders to put their money. And a lot of the herd moved into UNG when they started hearing about it on mainstream media, when the meme traders that are typically in the AMCs and GMEs of the world started putting their money into UNG because they thought it was cheap. Well, how do you like me now is what UNG is saying to the crowd that bought it at 20, as it's now trading below 15, down another 6.5% today, right? How do you like me now? UNG is one of those areas where if the stock market takes a big hit, like it did on Friday, you tend to see UNG is a really weird place where it goes up when the market goes down. So if you're expecting the market to crash anytime soon, then UNG makes sense. But as a long-term trade, in my book, I'd rather be on the sell side of this one. All right, so that's UNG. Now, let's go into one of the last places, probably the most mysterious. I've discussed this before. The most mysterious asset class in the world. No, it's not Bitcoin. It's gold. And the reason why I call this one of the most mysterious places is because this is an area most people just don't get. All right, GLD, the gold shares, the Spider Gold shares, moves lock and step with the price of gold. What has the price of gold been doing? It's been all over the place. Just when you think it's about to get above 1900 and go higher per ounce, then something pulls it back. What pulled it back? What pulled it back here lately in the last week has been, again, that play on the US dollar, that play on the fact that we're seeing asset classes like commodities pull back a bit, and that hit gold pretty hard, and that hit GLD pretty hard too. But as I look at GLD, perhaps we're forming a base here around the 166 half area. If you look at GLD today is up. Let's go ahead and bring it in, and you can see here up almost 1 percentage point, right? Last week's highs fall off, last week's lows bump up today. We get above this this open that happened on Friday, and then things start to look pretty interesting for GLD. By the way, I own a lot of GLD, and I sold a good bit of call options against my position that are around the 170 strike, right? Why did I sell 170? I sold the 170s that expire this week, and I did that against a large portion of my GLD position because volatility in these options very, very high. Very, very high. All right. So that's why I went out there and sold those. So my GLD position's going up, but the call options I sold, well, they're backing off a bit because they're rising too. So it's a hedge I'm looking at against gold for this week and this week only. Okay, so let's get into some stocks that were discussed on Money Morning Live. And the very first one I want to talk about is SLI. All right. How many of you are into or looking at Standard Lithium? Standard Lithium is a stock that's discussed quite a bit here on Money Morning Live. All right. My friend and colleague Chris Johnson was the first one that I heard talking about SLI, Standard Lithium. And so I thought I would look at Standard Lithium a bit differently than most everyone else. We're going to look at this in what I like to call 3 different charts. So let's bring up Standard Lithium. We're looking at it right now with what we call stock chart peaks. We got peak level support at around $6.60. Then again at 8, you can see 8 was last week's closing low. And then we also see it just below 10. Just below 10 is the support levels that you've seen here early in November. So we got support levels in November. We got support levels that happened just last week. Where is the resistance? The resistance is where we closed at yesterday. And then, of course, the all-time closing highs up here above 12. Now, several of you have different option positions on this. I'm not your investment advisor. I'm not your money manager. I'm not going to tell you what to do, but I'm going to analyze this, looking for any kind of rules that tell me I want to get long or get short. And then we'll look at the options and see what side of the options look like they may be the best. Now, to discuss this, folks, I need to go sideways with you for a bit. And I want to talk about something called darknet. Darknet is what I like to call our contrarian trading strategy. Now, what is a contrarian? A contrarian is someone who tends to go the opposite of the herd. So if you hear the herd all climbing into one area, okay, then a contrarian trader tends to take the opposite side. Let me give you a great example of this, and then I'll talk about darknet. So a great example would be Twitter, TWTR. Where you take a look at Twitter, and more importantly, I want you to take a look at what happened yesterday. And let's take a look at this on a 15-minute chart. All right, so there you go. All right, it was at around 8:30 to 9 a.m. 9 a.m. when the news yesterday had just reported that Jack Dorsey was moving on outside of the Twitterverse. We saw a big move up, and then at 9:30 when the market opened, that was literally the high of the day. The high of the day was above 51. It was close to 52. And then if you take a look at this, by the time we just got 30 minutes into or 15 minutes into the session, we'd already dropped down to below 49. So shaved 3 points off in the first 15 minutes. Add an hour to that, and now we're down here into the mid 40s. And then for the rest of the day, and again, this was a Monday. You saw that move down, right? Monday, yesterday. We saw that move down, and we closed near a low below $46 a share, right? Pre-market today, not doing a whole lot. Coming into this morning, down another 1.5%. Okay. What am I trying to tell you here? This is what I'm trying to tell you here, guys. Everyone jumped in and thought this was going to be a pattern. Jack Dorsey was leaving. This is going to be good for Twitter. All right. We saw a bunching at the gate at the opening bell. Buy, 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 buy. Then all the buyers were gone. And what was left was this market moving lower. The contrarian traders were selling this on the open and then buying it back right at the close. You can see the volume, all the volume that happened in the first hour, hour and a half. And then after lunch, it just kind of dried up. And then you saw this ping at the end as this last move down caught more selling. And of course, some of the folks over here that were selling were buying back. Contrarian traders, right? Again, what is a contrarian trader? Someone that takes the opposite approach of what the herd is doing. There is probably no better contrarian trading strategy out there that is worldwide than Elliott Wave, right? Elliott Wave is a A contrarian trading strategy consists of what's called impulse waves that move in your direction and correctional waves that move against you. The problem with Elliott wave that I see is that the waves continually change. And because the waves continually change, it's very subjective, meaning that if we were to all put the same chart up and I were to ask you to do the wave count for me, we might get 100 different counts. All right. But what we look at is we can all understand where a high is. We can all understand where a low is. And if we draw on highs and we draw on lows, we can all get channels. Now, what Darknet does is it is a strategy, a contrarian strategy that uses channels. The big thing between it and Elliott wave is that the channel signals never change. All right, a high always remains a high, a low always remains a low, and a channel stays exactly where it is unless it's broken. And when it's broken, a new channel can be formed, still looking at the old channel. The reason I'm telling you this is because if I have winners in Darknet, I have winners. But if I have losers, they don't disappear. The loser's there. It's important for me and anyone else in this business that wants to be consistent to always look at our losses and see what we could have done different, if anything. All right. Now, Darknet is a buying strategy only. It means that I'm only looking at going long certain charts. And I get this question all the time. Hey, if Darknet's only a buy-only strategy, does it work? Then it won't work in bear markets. No, that's actually not true. It will work in bear markets. And the reason it will work in bear markets is because there are things to buy when the market goes down, right? There are some things that go up when markets on the average go down. So I wanted to mention that this is an example right here of what we see with channel collision. Okay, we can put together up channels, we can put together sideways channels, we can put together down channels. Now, what I do is, with our thousands of lines of code in tomsoptiontools.com, what we do is the computer can go in there and create some tolerable moves where, the channels will put together, but we'll come outside those highs and lows. We'll add some percentages to those. And what we see when we're looking for channel collision is when a long-term, an intermediate term, and a short-term channel all come into the same area, like you see right there on the screen. Long, short, intermediate all collide together, creating what Reggie just called a triple stack compression, right? This is what you see right here. This is what the computer sees. Same signal, but it shows me my triple stacks in the past. Here's a small little move. Here's a little bit bigger move. And then there's a move that came off the triple stack buy on this particular stock at this particular time. I'm able to actually go through and do searches on these and create particular case studies. Now, what I want to do is I want to go and look at these stocks that were talked about, the most popular ones that were talked about on Monday Morning Live this morning, and just see if there's any triple stacking going on with these charts. All right, so let's take a quick peek. And the first one we're going to look at is SLI. So I have SLI up right now, and I have Darknet signals on SLI, but I see nothing. So there is no Darknet signal on SLI. I've got it all loaded up and ready to go. Could there have been some triple stack? No, there is a double bottom that occurred on SLI between October and the end of November, but there's no long, short, and intermediate term channels all colliding. Let's take a look at our next stock. Twitter. Okay. Now, this does not have any Darknet signals. There's no triple stacking. In fact, the only thing it seems to be stacking up is lower lows. Continue to move forward. Momo. Okay, so Momo's got earnings coming out in a day. This is one that Voz was talking about this morning, and I'm looking for it for triple stack. There are no triple stacks on Momo. There is something interesting that's happening on Momo, and that is that it does seem to have a kind of a weird looking head and shoulders pattern happening. If you were looking at this as a shoulder, you were looking at this as the head, and maybe this is your other shoulder, potentially. But something that I look at when I'm looking at stocks and I see that 1 day to to earnings, all right? So earnings coming out on Momo at the end of the day, then it might make sense that if I don't have a buy and I don't have a sell, and I don't see anything that is a high probability trade here, just to move on and move on to something else. Let's see what BZUN has, all right? This is BZUN, another depository, another new low, low after low after low after low, but no darknet signal, okay? JKS, all right? This is Jinko Solar. Jinko Solar actually has some higher highs. Jinko Solar came up and double topped and pulled back, but nothing right now that is showing me any kind of a dark net signal, okay? Again, what is a triple stack, okay? A triple stack is when we see long-term channels, intermediate-term channels, and short-term channels all colliding in the same area, okay? Let me show you a triple stack. Take a look at Bitcoin, BTC, all right? I'm jumping ahead right now, but you know what? That's what we do. This is a live show. I don't have anything pre-programmed and ready to go, all right? So take a look at Bitcoin for a moment. You see Bitcoin? All right, we've got some kind of movement here in Bitcoin, but guess what's happening here? We are getting into a long-term up. We are getting into a short, intermediate-term sideways. We are getting into a short-term down move. But you know what? If I come over here and click on darknet signals, look what I get. Boom. I get a lot of triple stacks. Why do I get a lot of darknet signals in something like BTC? First of all, the more volatile something is, the more often I'm going to get signals in this particular strategy. So if you look down here, here's a darknet signal, a buy and a sell that did not work out. This was a loser, okay? How much did it lose? Okay, well, let's take a look. 47,000 down to about 43,000, okay? 6543, $4,000 loss. Okay, let's see what happened here. Here's the darknet signal. Started around 44 and went all the way up to 63. That's a 19,000 point gain. Okay, so 4,000 loss, 19,000 point gain. Here's another signal that came in, and this signal came in around 61, and then it came out at about 65. So there's a $4,000 move right there. Here is a buy signal that came in around 56,000, and look at this. This is a rebuy. So what's happening is we're getting a second triple stack move here. So what darknet does is it is a strategy that can give me up to 3 signals in the same direction before an exit. So I see Bitcoin gave us a darknet buy about a week ago. Bitcoin just gave us a darknet buy yesterday. So another darknet buy yesterday. And what's BTC doing today? Let's go check it out. BTC futures is /BTC. Oh, look at them apples. 58,870 on the move. All right, on the move. We talked about this yesterday with Bitcoin. We talked about the fact that cryptocurrency was looking very bullish. If you joined me yesterday at 1 p.m., then for the first half hour, what did we talk about? We talked about Bitcoin. We talked about the winner for the trip to New Zealand. But I talked about the setup that was happening right now in cryptocurrency, in the cryptocurrency markets. All right. We talked about these setups. We talked about this particular move, this particular market that was setting up for big bullishness. You know, the fact that we had such a drop on Friday and that we have taken that drop and done what with it? We've replaced it. Where are we now? Let me put on a day chart. Guys, I'm sorry. It's my ADD. I apologize. Okay. And what I mean by that is that, again, I can go in multiple different directions. 69,355, that was the futures market's high back on 11/10. Drop all the way down to what happened on Friday. There's that big move on Friday. We were near 60,000 on Friday, and we dropped all the way down to 53.6. You know what's really cool about this? Look what happened now. This is the futures market, so it does not include Saturday and Sunday, and it does not include Thanksgiving Day, because these markets right here, I think I'm pointing in the right direction. Am I? Let me see. No. this month. These markets here, they're closed on holidays. They're closed on weekends. Okay, but can you see what happened between Friday and Monday? Friday to drop down. Monday we gained back and then some. And here we are today, now confirming that yesterday was not a fluke, right? And you know what it's doing? It's doing it in the middle of a market drop. It's doing it in the middle of a drop where the markets are off today. They were much lower, but they've come back. Okay? We're down 0.5% in the stock market. We're up, 0.75% right now in BTC. Okay? How's Intel look today? You know what? That's a good question. And because I'm in a given mood today, and I just saw it pop up on the screen, let's take a look at INTC. All right, so INTC. And INTC is down so little, it doesn't even matter. All right, it doesn't matter. But if you want to take a look, you can take a look at what's going on. I mean, Intel's looking really good. I'll tell you why. Look at what happened to it. Yesterday was absolutely fillable at the prices. That 49.50 trade for 45 cents or less, absolutely fillable. All right, look where we are today. We've gone from the high 48s yesterday, that was the lows, to clicking on 50. If we're above 50 in the next couple weeks, folks, that's a double. That's a double on, what do we call that? A beer budget, okay? That's a champagne return on a beer budget. So there you go. All right. Hey, let's kind of move forward here. I have a couple other stocks I want to share with you here. So back to our stock charts. Okay, JKS, and I'm back to SPY once again. But I want to show you what I did. Okay, because a few of those stocks have earnings coming out today, I wanted to take all the stocks that we discussed this morning, and I want to run them through what we like to call IV percentiles. Okay, what is an IV percentile? IV percentiles are a way of looking at the stock market, looking at the options on a group of stocks, and finding out which ones are the cheapest and which ones are the most expensive right there in the list. Well, I've already done this, so let me show you what I did. I took my stocks, those 10 we discussed, including the ETFs, and there they are, from most expensive to least expensive options. So right now, all the expensive options are in USO today, right? So if you're bullish on USO, if you think the bounce is coming, you do not want to buy calls because those options are expensive. You want to do what? You want to sell puts. And if you're bearish on USO and you think this thing is still moving down, then guess what you want to do? You don't want to buy puts. Too expensive. You want to sell calls or sell call spreads or even buy put spreads, all right? Take advantage of the volatility bump that's here. It may not last, right? Moving on down, we'll see Momo's on the chart. That's because the earnings are coming out here at the end of the day today. But look at TLT. It's up there too. Gold is up there. I sold premium on GLD yesterday. Why? Because it's expensive. Even the SPY had expensive options coming into this week. Then everything kind of rolls down. Look at Twitter. Twitter all the way down there at the bottom. All right, when you see what's happening with Twitter, let's get a picture of Twitter real quick. Let's get a twit pic. Here's the twit pic. You see when it jumps up like this? That's high vol. This is low. High, low, high, low, high, low. What's up here that corresponds with all these high moves? Earnings reports. All right, then we have the drop down. And the low on Twitter was just a week or two ago when it was trading down here, when the IV was trading down here in the high 30s. Let's call it 40. Look where it is right now. It's trading in the high 40s to low 50s. Okay, this is not the stock price. I know it. I know some of you are looking at this saying, I never saw the stock price of Twitter up here at 125. That's because this is not the stock price. This is a gauge of options premium. When options are expensive, when options are cheap. Guys, we want to be buying options when they're down here on the bottom side. These are the Black Friday specials of options. These are the day before Christmas when all of a sudden you're procrastinating. You want to go out there and buy something, and everyone knows it. And all of a sudden, things go a little higher in price. These are the crowded buys. This is the area when people are not buying options. I want to be a buyer when people are selling. I want to be a seller when people are buying. It's just a matter of what I want to buy, whether it's a call or whether it's a put. Okay, so let's take a look and move into an area that I want to spend some time with you guys on today, and that is unusually priced calls and puts. Now, we have an app that I talk about on the program, and I've been talking about it on this program almost every day. It's a free app on the iPhone, for your iPhone or your Android device. You just have to go out to the Google Play Store or the iPhone Store and go look for Tom's Option Tools. Download that. Log in if you are a member of our software. If you're not, it's okay. Down below the software login, you'll see non-subscriber login. Click there, follow the bouncing ball there, and you have access to this list. It's called the Morning Report. Morning Report is 6 different lists. We're going to look at unusual calls and puts today. So let's go take a look at them right now. I also had them on my software, so that's where I'm going. I'm going to go to my options. I'm going to go to my rankers, and I'm going to go to Morning Report. And here's the Morning Report calculated as of yesterday's close. And here's what we see. What's unusually high in the call option area? Coca-Cola has a Jan 21st 40 call option, unusually high volume. You might say, 9,700 contracts. That's not a lot of contracts, but it's unusually high for Coke. And it's also interesting that it ends in double zeros, which means somebody went out there and bought a large block of these 40 calls in Coca-Cola. When I look at that, I think, why in the world would someone buy call options on Coke? 2 reasons. A, they see the price of Coke going up because something's going on with Coke. Or B, isn't Coca-Cola a defensive stock when the stock market goes down, that we tend to see Coca-Cola go up? Yep. And so that might be something too. It could be a hedge against the overall market. CCJ is on this list. NRG is on this list. McDonald's is on this list. All right. That's the February 17th. Excuse me. That's the December 17th, 230 calls. All right. So what's going on here? When I look at this, I see that. I see UAL. I see Visa, Twitter, Nike's on here, and PVH down at the bottom. And then I'm looking, I'm saying, wow, okay, Coke is on here, McDonald's is on here, Twitter's on here. Yeah. Now, is there some sort of coincidence that some of these are on here? No. The real coincidence is the only thing that these all have in common is they all have unusually high call volume. Okay, I'm not looking at it as saying, hey, somebody's going to buying calls at McDonald's because he's going to be there soon. He's going to wolf down a few Big Macs. Then he's going to realize he's going to need to wash that down for some Coca-Cola. So let's buy the calls there. And I'm going to tweet about it too. No. The reason they're on this list is because they are unusually high based on their option volume relative to where the volume has been over the last 30 days. Let's look at the puts. You got JD at the top. And again, what I'm looking at here is 6,100 contracts traded, last price 205. Based on what? Many, many less contracts traded over the last 30 days. Then this pops up. These are the top 10 most unusual based on what they're doing. Okay. You see Sophie on here. Sophie shows me this is a leap option, guys. When you look at Sophie, and you see that 240119P25, that's the January 19th, 2024 puts, right? 35,000 contracts and at $14.50. Let's look at this one just a little bit more detail, right? So when I click on that actual symbol itself, I can see the 14 puts. I can see the stock is trading right now at around, what is that? $18 and change, and someone's buying someone's either buying or selling the 25 puts. Okay. Now it looks to me like if someone's going in here and that 25 put, first of all, let's do some math here. If the stock's trading at 18 and I own a 25 put, how deep in the money is the 25 put? It's 7 points in the money, okay? 25, 18, so there's 7 points between 25 and 18. But if this stock is trading at $14.50, okay, if it last traded at $14.50, what it tells me is that there's another $7.50 in there that's time value. And this could be a potential, a person who sold these puts who believes by January 2024 that Sophie's going to be trading above 25 and wants to take 7 points of premium in and plus put themselves 7 points in the money on this trade at the same time. That's the possibility, right? It could also be possible that someone bought these puts, okay, thinking that the stock's going to be 7 points below or 14 points below 25. It's going to be below $16 by January 2024, okay? Is it A, is it B, or is it all of the above? Well, it's got to be all of the above because in order for someone to sell these puts, someone else had to believe they were completely wrong and buy them, right? So there you go. And we can even put that in a lot in the mix. It could be buying puts against the stock that someone owns. It could be, both of these traders could be bullish. There could be the trader that bought the puts because they're buying the puts against the stock they own. And it could be the trader who sold the puts taking a bullish stance themselves. All right. So that is unusual calls, unusual puts. Guys, let's roll tide here real quick. Let's talk about rolling tide. And I talked about this last week. All right. What roll tide is when I look at event-driven strategies. Event-driven strategies are typically earnings. Right. I like to be looking at earnings well before anybody else does. And I like to be getting out of earnings, or if I'm going to buy call or put options, I want to do it before anybody else does it. And then I want to sell them when everybody's talking about them. Okay. And I can do that two different ways. I can do what's called the tide rolls in 1 to 2 weeks prior to earnings. There are stocks with patterns of price and volatility rising into earnings day. This is the best time to buy option premium. Okay. I did this with you last week. I shared with you last week a trade that I was in, and we talked about this. Well, guess what? I got another one that's looking pretty interesting that I'm going to share with you here right now. But we have the tide rolls in. We have the tide rolls out. Okay. Tide rolls out is when I like to sell premium right before earnings. But if you're looking at a way of doing this that has low risk, then you want to be buying option premium before everybody starts talking about that stock. So let's take a look at it. All right. So if you take a look at this chart, I showed a chart like this just a moment ago on Twitter where we saw these highs. These red line highs and then a pullback, and a red line high and a pullback, red line high, pullback, red line high, pullback, and here we are starting to go back up again. These highs all correspond with earnings because what happens is earnings is like the Super Bowl, okay? If you've got tickets to the Super Bowl, and let's say you paid face value for them, and you've decided you're not going to go to the Super Bowl, but you're going to sell those Super Bowl tickets. Well, what are they worth? Let's say you paid $250 a piece for Super Bowl tickets for January. Okay. All right. Right now, I'm going to tell you what they're going for. I'm going to tell you what Super Bowl tickets are going for right now. We don't even know who's going to be in the Super Bowl. And if you take a look at Super Bowl tickets, let me see if I can find you some Super Bowl tickets and what they're going for. I got to scroll a little bit here. Are you kidding me? How far down do I have to scroll? Found some. Okay. Guys, sections 1 through 4, level 11, end zone tickets right now to the Super Bowl in LA. Right now, the value is they're valuing them at $30,000. That's for how many tickets? How many tickets is that for? Let me look and see. Get your tickets. Let's see. Exact number of tickets, 4 tickets. Okay, so $30,000 for 4 tickets. That means those tickets are now worth an estimated $7,500 a piece, and we don't even know who's going to the game. All right. What I'm saying is that's going to get even more expensive. Why are tickets to the Super Bowl so expensive right now? Because the dollar's cheap. And of course, we don't know who's going to be there. But what I'm doing, Mike, that's pocket change. Let me tell you something. I would never pay $30,000 for 4 tickets to a Super Bowl. I have my standards. But let me just say this. Now, if it was a box, if it was a VIP box, maybe we'd be talking. But take a look at this. This is like the Super Bowl, buying tickets to this stock when it's up here, only to see it turn around and fall drastically. This is what happens as we get into earnings. Those option premiums go up. That's the ticket to owning the stock or the ticket to shorting the stock. And those ticket prices get expensive as we get close to the big event, which is earnings. All right. This is Hewlett Packard. All right. I did this last week, and I went in and determined that Hewlett Packard had on average a move of about 86% between, within that week to 10 days before earnings come out, that those call options moved up 86% on average. Well, guess what I ended up doing? I ended up going in and buying those calls, and I sold them the day before the earnings announcement. Well, I found another one in Stitch Fix, SFIX. You know what this one tends to do? It tends to go down into earnings, and it's been getting lower and lower and lower. Now, I don't want to hold this to earnings. I want to look at buying the put options on Stitch Fix and then getting out of them right before earnings. So earnings are in 8 days on Stitch Fix. Now, stock went down the week prior, went down a little bit the week prior, went down a little bit, and then popped up the week prior. So this is a 3 out of 4 event. But here's what happened the last 4 out of 4 earnings cycles. Up, up, up. And then here we are now, already going up. So, this one actually it actually started a few days ago as we were in the high 80s, and now we're already up in the 100s. But man, this is the show everybody's going to be talking about next week. What is Stitch Fix going to report? So I ran some numbers. Here's what I found. 7 days before earnings. All right, the earnings date is on 12/7. It's going to happen after market close. Right? In the last 4 quarters, it has worked 3 out of the last 4 times, hence a 75% win ratio. The average change in implied volatility has been 64%. Okay, we see a net theta decay because, again, we see time value drops when you buy something. Those are your option traders. If you're buying at the money options, time value is going to decay. But what we're looking at is we're looking at that delta and that IV effect to help push that up. So if we have option premiums that go up with a stock that goes down, what's the best strategy? Buying put options. Now, this one only shows about a 30% increase in the stock price on average between now and the day before the earnings release. So let's take a look at the December 10th, all right, 26 puts on Stitch Fix. First, we're going to look at Stitch Fix. So Stitch Fix, SFIX, let's put it in the SFIX, put it right there. And the stock's now trading at 25.86. It's down a little bit more today. Let's look at those puts. Let's look at not this week's. This week's do us no good because the earnings come out next week. So I need the options that expire after the earnings report. Now, I want to show you something. Look at this week's 25 puts. 49 cents. Look at next week's 25 puts. 242. Right? Now, we could look at the 25 puts because we've seen that, again, that drop in the stock price. If we look at the 26 puts, they're now trading at around 3. Okay, so 3. So let's take a look at 3. So if I were going to look at this particular strategy, I would be looking to buy the December 10th 26 puts, all right? And I want to put some sort of limit order out there. So let's split the difference and let's see if we can get these for $3. And now, what is 30% of 3? 90 cents, right? 30, 30, 30. Is that right? Yes. So if I bought these and I got filled at 3, I would look to get out at $3.90. Why? Because that's 30%. That's the 30% move. If I'm going to get a 30% move in the actual option trades, then I want to take a 30% move if it happens. Okay? So again, rolling in the tide. What are we doing here, guys? We're getting into this trade before everybody on mainstream media starts talking about it. And once they start talking about it, then I want to sell this ticket off to somebody else right before the event. I don't want to hold this through the event. That's where the risk is. You know, the risk to someone who is holding tickets to the Super Bowl. You know what the biggest risk is? Holding those all the way up through kickoff. Okay, because once the kickoff happens and the event begins, what happens outside? You got a lot less people outside you can sell those tickets to, number one. But the most important thing is the event has begun. And by the time we get to halftime and the halftime show happens, whoever's going to be at the halftime show this year, I don't know. I don't remember. I didn't look. But once halftime's over, you know those tickets are drastically dropping in price. It's the same thing with earnings. All right? Tick, 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 tick up until the earnings report. Once the earnings report comes out, it's like the halftime show at the Super Bowl. Boom. Those tickets are worth much less. They're worth much less. Right? So, hey, every once in a while, buying something right before earnings works. But even a broken clock will work twice a day. What happens the rest of the time? Okay, guys? Okay. So, hey, let's kind of move forward a little bit. Let's talk about the last 5 minutes of what's happening here in the marketplace. And I'm talking cryptocurrency. All right. So let's take a look at cryptocurrency. Let's see what's going on live. Let's check in live with BTC and see what's going on with the Bitcoin. Oh, look at that. 59,000. 110. We got as high as 59,615. So we backed off a bit, but we did make a higher high than yesterday. That is great. We're up 1% on BTC. Let's take a look at ETH. Oh. Can I get an amen on ETH? You know what? What did we talk about last week with ETH, guys? We talked about, and now, you know what? I see some of you guys talking about Tika. And then there's some of you in here that talk about that talk about Nick. All right, my friend Nick. Let me tell you something. We're all involved in one way or another in cryptocurrency. Okay, I have a long-standing history with cryptocurrency. You got to go back to 2013 when I began mining cryptocurrency, and when it was below $1,000 at the time. Okay, in fact, it was trading in the hundreds when I was mining it. It was trading in the thousands when I was buying it. If you go back and look at Ethereum, I did not mine Ethereum. All right, what did I do with Ethereum? I bought Ethereum, and I actually bought pretty heavy on Ethereum last year. I've been buying Ethereum as late as this year, just a few months ago, but as a buy to own. But guys, this is no news. What I am saying is the differences between me and a Tika and me and a Nick. All right. I don't know what their net worths are. I don't know what kind of skin they have in the game in crypto, and I don't really want to know. Okay, that's for them and them only. I know what I've got in this. I've got a long-standing interest in crypto. I understand the mining aspect. I understood it a lot more then than now. I did not mine Ethereum. I bought Ethereum, but I also am a trader in cryptocurrency. Okay, I'm a trader in cryptocurrency, and I'm looking at, for instance, Ethereum. All right, what were my targets? Let's go back and talk targets for a little bit here, as we got a good 5 minutes left in this. What's my target in Ethereum? Does anybody in here remember my target on ETH? What's going on with ETH like tomorrow? I don't know what's going on tomorrow. If I knew what was going on tomorrow, Larry, I'd have a crystal ball. 20K? No, that's too high. 5K? That's too low. It's somewhere in the middle. Okay, here's my target on Ethereum. 9,000. 9,000 my target. 9 to 10K. Teresa and Mike is correct. 9 to 10K. 9K is more. 10K is more of a round number. 9K is more of looking at the charts and seeing what the charts and seeing what the market cap is telling me. The market cap tells me 9,000 on ETH. So when you listen to the so-called gurus out there that say, I wouldn't put my money into ETH. It's too expensive. The gas prices are too high. The this, the that, the blah, the blah. Listen, money talks, folks. That chart talks. And you know what that chart's telling me? We're going to be at new all-time highs very, very soon. Okay? We could be at 5,000. Hell, based on that, what's going on with this thing right now, we could be at 5,000 by the end of the day, but more likely by the end of the week. All right? Yeah, and it could be because of the ETH burn that's happening. Okay? We could why ourselves to death here. Why does this happen? Why does that happen? You know what? Instead of being a why guy, how about be a why not guy, a why not girl? Why not get into this at specific levels? Why not look at Bitcoin? And I'm going to look at it right now. Why not look at Bitcoin and get in when we get signals in Bitcoin? Why not get into Ethereum when we get signals on Ethereum? Why not get into Dogecoin? Let's put Doge up on there. When Doge says, hey, I got another signal. I got another signal yesterday. All right. Why not? Don't be a why guy in this business, guys. Why guys and why girls, okay? Why guys and why girls, they get left at the door, all right? Be a why not person when it comes to cryptocurrency, all right? Be smart about it, though. Don't throw your whole wad in there, all right? I hear people saying, what's the best amount to put into cryptocurrency? Ken, I'm not your money manager. I'm not your investment advisor. I'm not going to tell you put 10% in cryptocurrency or put 5% in. You put in what you feel works, okay? But I like to do this. Me, I am an investor in crypto. I'm a buy and hold, but I'm also a trader. I am an income guy in the cryptocurrency world. Buying and holding, well, that's one portion, okay? But if you want to follow me and really get a chance at these 10xers, these 20xer returns, okay? When we look at something like an ADA, let's take a look at ADA. We talked about ADA in this room. All right, so let's look at ADA. What's going on? I think ADA right now is the buy of the century. I think this one is the buy of the century. And the reason why is because it is the caboose right now. This is the caboose, all right, that's happening in the world of crypto. We're talking about something that's trading around 161. This thing got down to around 140 here in the last couple days, right? So your darknet signal on ADA, that was at 180. Darknet signals don't signal an absolute bottom. They signal areas where we see channel consolidation, where we see triple stacks. We see a triple stack right now in ADA. By the way, for those of you that are microcurrency traders, the last two trades we put on are up double digits, even with Bitcoin dropping and now rebounding, even with Ethereum dropping and now rebounding. All right? And I'm not going to mention those names because that's between you and me, microcurrency traders. But if you want to be a microcurrency trader, come join us. Come join us because I'm going to teach you not only how to buy and hold, but what to buy and trade for the income side. Okay? Again, it's called Microcurrency Trader, right? We launched a couple weeks ago. We opened back up the doors for our microcurrency traders. For those of you that are kind of sitting on the fence, take a look. Take a look at what we got, okay? I think you'll find with the folks that are involved in microcurrency trader, especially the long term, the folks have been with us for years, and they're actually renewing their subscription year after year after year. They will tell you in 3 words, it's worth it. All right? So, guys, that's all for me today. Join me tomorrow. We're going to discuss high vol, and we're going to discuss high open interest, and we're going to discuss high probability trading. All right? Chris Johnson's up next. Thanks again, guys. I'll see you tomorrow. Bye, everyone.